Hey guys, Crypto Hotep here, making another video. I know it's been a while since my prior video, but that's due to a couple factors. One of them being one of my rules. So one of my rules within trading is not to overtrade. So I hold myself to 3 or 4 trades that I'm in at any given time. I'm only in 3 or 4 trades. I don't like to overtrade because at any point, especially if you're trading crypto, the floor can just come up under you and the whole market could dump and all your trades would be lost. So you don't want to be overly exposed that way. So I hold myself to that rule of 3 to 4 trades. And because I'm trading off a higher time frame, typically my trades are swings, so they would last for 4 weeks. And in this case, with the graph, about 2 months. So this trade ended at about close to 74%. So 74% gain, which was a very good trade, one of my biggest trades of this year so far. And we're going to jump right in here to just to show kind of my method with using support, resistance levels, a little splash of smart money concepts to complete this trade. So the first thing that I typically do is I switch to a line chart and then go to my monthly time frame. My monthly time frame is where I will designate key levels that are of interest. So when I went to the graphs line chart for the monthly, a couple levels stood out. This level here, which was basically the start of the graph, I believe that's December 1st, 2020. And just knowing that this price movement here, right here, would overlap or wick this. So I didn't have to worry about marking this and this. Scrolling down, marking a key level here and here. And basically I'm looking for very sharp, pointed levels here, here, and then also here. So what I did notice is I saw price, I believe that was around close to Christmas 23. I did notice that price was breaking past 15 cents. So 15 cents, this key level here, price was breaking past that. And me, I am a break and retest trader. So when a level's broken, I usually look for a retest of that level that was broken, and then I will get into the trade. So I was basically looking at levels around that area to see if I could get in there into that trade. Another thing that I did notice was this area here. So I love it when crypto has a big sell-off, which the graph did, and we can see here it was around, we're looking at around March 2022 at about 46 cents or so. At that point, the graph sold off very dramatic fashion all the way down to 9 cents in June. So that took about 3 months to complete, but it was a very dramatic sell-off. So the good thing is when price does have a change of character, meaning when price changes from a downtrend to an uptrend, this big area, runway is what I like to call it, or a gap, needs to be filled on the way up. And what's nice is there's typically a smooth way up because there was also a smooth way down. So it goes vice versa. So I did notice that, and that's why I placed my target at a pretty decent level here because I was very confident in this. So when I marked my levels off of the monthly, I switched to the daily, and I switched to my candlestick charts. And so here I did mark. The next thing I did was I did mark 28 cents or 0.2850 as my target. because I wanted a little room away from 35 cents because 35 cents was a key level for both support and resistance. And I did want a psychological level, so I did want a whole number as well. I did place a premature trade here at 18.55, so 18 cents, 18 and a half cents. And this was a little bit premature of me, kind of getting too trigger happy here. So one of my other rules for trading is when price breaks through a level, you have to wait for a corresponding green candle or candles after that break. And here I didn't do that, didn't follow that rule, because you could see the next candle was red and it still stayed on that breakout line. So it wasn't really a breakout. I wouldn't consider this a breakout at all. This candle here, this is more of a breakout here, but this one wasn't. But I did place this trade in prematurely. So when I did notice that, and I did notice that mistake, I started buying down to decrease my my per price in each coin. So I bought and I started buying down from 1855. So we went back down to 1797, 1680, and then my lowest that I did buy was about 16 cents, 1634. So I bought that, and all I did, honestly, I held through a little of the downside. After 1634, price went all the way down to 1384. Now, the reason I did hold, though, couple factors. So we had daily support that had flipped. So we have daily support here, but we also have a key level. You have a key level at about 1527 right here, and we never broke it. So if you look at it, price has wicked down, came up. Price pushed down, closed this candle, but again, this was not a good bearish candle. So I don't consider this a bearish candle. To me, a bearish candle, it needs to have no wicks, and it needs to have no wicks on the top. It can have a wick on the bottom, that's fine, but it has to have a big body. This didn't. This is an indecisive candle. And essentially what happens after this candle is there's usually a reversal, as you can see. So the next candle is green. And so and the third thing is the 100 EMA. This orange colored line here is your 100-day moving average. So usually this is my last go. If I'm looking at price and say a trade is turning against me, what is my cutoff point? Typically, my cutoff point is if price closes below the 100 moving average and continues with a candle or multiple candles to the downside below the 100-day moving average, then I will cut the trade off. Here, this did not happen. It actually tight-roped the 100-day moving average here, 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 and here, and bounced up. So once it bounced up, you get the bounce and then the rejection from daily resistance now because price is below it. But then what happens? Now you get a break. Now you get a break here through the daily resistance. That turned to daily support, and I did know that, or I did note that potentially could happen here. That was that drawing. And then after that, it was off to the races. And what's nice is here, once I saw that we cleared this was a given. This target was a given because this was the only thing, this price or this daily resistance here was the only thing that was really kind of holding me back here, because what could have happened is we could have hit daily resistance here, came back down to the key level, maybe did a little ping pong action here and then came up. But this was a very smooth transition to the target or to the TP, I should say. So all in all, good trade. It was 74% gain on this. And one thing that I would do is hold true. One thing that I would do better on this trade, or that I would do better on this trade for the next one, is hold true to my ruling of staying close to the when price breaks above the key level, waiting for those consecutive green candles, and then placing your bid or watching price come into that key level before you get into the trade. And I think that's huge. So I think that's one thing that I could have done better. I stayed true to my rule about the 100 moving, the 100-day moving average. So that was good. And all in all, it was a really good target as well. As you can see, you have a little rejection here, but I mean, we have 19 hours left in the day here. But all in all, good trade. And again, if this helps you in any way possible, um, feel free and subscribe, like, and let me know what other charts you'd like me to do. All right, thank you and happy trading.